Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn and Associates with your metals market update for this Monday, the 16th of April, 2018, just getting on about 1:40 p.m. Central Daylight Time. So we had the surgical strikes. The precision was there. The interesting part was the Russians did not fire back, supposedly, according to the press, their missiles. They kept their soldiers in certain areas because, as I understand it, we did not only take out the chemical weapons factories, 3 of them, but we also hit certain airfields so that the Syrian Air Force could not do what they were doing. I'm sure we stayed away from wherever the Russians were because other than words, that's all that we're hearing. So what did the markets do? The markets, as you can see in stocks, they're immediately back off track of that now, looking at earnings, looking at what interest rates might or might not do. Metal markets, especially the copper, came alive today, and the market is saying, okay, let's get back to the business at hand. We have tariff wars to consider, NAFTA deals to consider, what's going on and where. And that's where I think the market is. Gold's story is it needs inflation. We're not worried about Syria anymore. And the fact that the market did not break today, like you'll see breaks in crude and all, is good for gold. That doesn't mean it's ready to pick up and run necessarily, but it certainly doesn't look like it's ready to break. A very different type of story. Let's see what I'm talking about. This is called a weekly area chart of closes, and it's only the closing prices. I've made them in the gold color, and in red I've got for you the 18-week moving average of closes. When the market is over that number, it is said to be bullish. Now the close is going to be in this area. The markets settle. I know this sounds crazy because I'm doing this at 1:40, but they settled an hour and 10 minutes ago. They will trade Chicago time until 4 p.m., basically another 2.5 hours or so. So gives you an idea what's going on there. When we look at the action, we have been stuck at the 1370 down to this low 1320 area recently. The pattern, though, when I put a swing line on it, and this is a chart without the indicator called a swing line that we make available in our charting software, you have a pattern of higher lows and higher highs. In plain English, as long as 1335.30 is not taken out, the market remains in an uptrend defined as higher highs and higher lows. The support for the market comes in against the 18-day moving average of closes. The 100-day is down here at the 1322.80, and I've put back on the 200-day for you to see right here at 1308.50. The trend is up. The bias is up because you're over the 18-day average of closes. Last week, we got to a resistance point. See these black dashed lines there and here? They're called Bollinger Bands. They're an algorithm designed to keep the market trading within them 95% of the time. From when they narrow, you often get price moves eventually that move rather large. Go to the VIX. Look at all of 2017, how narrow, and then all of a sudden it moves out to the 50 level. The longer it stays sideways, the bigger the price action in one direction or the other. I don't call this big-time sideways action, I have to tell you. It's generally sideways, but not that type of action. When we look at the slow stochastics, a momentum index, I believe that momentum often leads price. This is about as flat in the water as you can imagine. It's not pointing up or down. So what we have is a market that temporarily is in an uptrend. It can turn into a downtrend if prices break through the lows right there of Friday, 1355.50. That would give you potentially a pattern of lower highs and lower lows calling into play this area. So that means the bulls are probably defending their position. They have the trend up, the higher highs, higher lows. I look for them to be supporting it there and not wanting the market to get under that 1335.50. The same patterns in GLD. Higher lows, higher highs. I see resistance up here at 128.44, support 126.86, and you don't want to take out 126.47, the bears will grab control. That doesn't appear to be the case at all in GDX. Even if you broke through a previous low, you've got another layer of support, the 18-day under you. The negative here is that the market is, number one, very overbought. It's hit its upside target. Nicely, it got over its 100-day moving average of closes. I'd say as this market keeps working against that number, it's trying to give you a longer-term pattern that maybe it can turn itself up. The gold-silver ratio is backed off from 82.5 now to 80.95. I'm going to go on and keep saying I think that ratio's extremely, I can't say that enough, expensive in the 82 level. When I look at the May silver, here is a market fighting battles between the green line, which is the 100-day average. The 200-day is up here. 200-day averages are very important. Unlike the gold market, this is really a well-defined sideways action in the market. If the market can hold this long enough and break above it, people will say you've got a base. If you break under it from here, people are going to say that you've made a longer-term top. Right now, who's in overall control? The bears, because you're still where? You're still under the 100-day and the 200-day. Short term, the bulls will try to, I think, defend the market right here in the 1650 level. In the copper market, you fell back. If you look at today's low of 304.40, you did not take out 304.05. And so often as you get used to watching these tapes, you'll hear me talk about this line in the sand, the 18-day average. That's where the market made it stand. If you can follow through 2 layers of resistance on the top side, 313.50, let's call it, and 314.95, right there. If you take out today's low, because it's an outside day up, I'll call this a bull trap and immediately be looking for 296.30. Doesn't mean you're going there, but as a chartist, that's how I'm looking at the market. Platinum did not perform today. It kept going up to that line in the sand, the 18-day average, and couldn't do anything yet with it. Don't see anything to tell you on it. In the palladium, this market came alive on Friday. You created a pattern of higher lows, higher highs. If you know no more, you're overbought, and if you extend, I'm going to look for resistance in these 2 numbers, the 100-day average and the upper Bollinger Band. You're knocking on the door of that. Dollar index turned bearish today. Lower highs, you already got lower lows, sideways action, momentum pointing down, bias down. Unless you take out 89.67.5, I think the bears grabbed control of the market. Now, our guide to technical indicators. You hear me talk about everything here. Maybe you need what we'll call a primer on it. We have 2 of these. We've got volumes 1 and 2. It's Gann, it's Fibonacci, it's going to be the oscillators I use. It's really written in well detail with examples all the way through. It's from our good friends at Modern Trader Magazine, something that I helped them with I don't know how many years ago. We put this all together. We created it as a PDF. I'd like to get it in your hands. How do you get it? And it's free. Simply give us a call. You can go to our website at www.iraepstein.com. You can click up here at any point in time. It'll take you right to our forms, or under us on some websites it says, click here for Ira's free information. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.